The following is a presentation of TFNN. The Morning Markets Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off 9 a.m. Eastern Time, about 24 minutes to go until the opening bell, and you got markets barely in the green. S&P's up by 5 points. We've had a pretty tight trading range, and overnight, we had about 20 points. But you take a look. You go back on a 15-minute basis, all day yesterday, right? Just chopping around, hovering around this line of basically right where we are right now at about 67.75. NASDAQ 100, a little bit on the lower end of where we've been chopping around. We were just testing the lows of yesterday at a price point of 25,206. Right now we're negative by 40 points, 25,256. Dow, slightly in the red by 4 points. We'll call it almost flat at 47,131, and the Russell off by 8. All right, let's get to the action. Gold, Bitcoin, dollar with some strength. Yields right under 4% right now, but how about Bitcoin? Now, gold was just falling apart yesterday, and Bitcoin accelerated higher, and then at about 12:30, the market said, no, not so much. We roll over, and you give up all of those gains. We're right back to where we were yesterday morning. Bitcoin off $3,800 on the session, 108,245. We talk about yields. Now, just in the last few minutes, a little bit of volatility, lower price, higher yield. We're negative by 3 ticks right now, 3.97. 3.97, the yield on the 10-year. We are 1 week out from a Fed meeting. You jump over to the dollar strength, 99.09. We're talking to our man Teddy Kegstad coming up later in the program. We'll talk to Teddy about currencies, as we always do, some commodities, always a good conversation. And gold, oh boy. All right, so Monday night you make a high at about 4 p.m. Eastern Time of 43.98. And boy, it was an acceleration all day yesterday. It was an acceleration at 8 o'clock last night. And we come back and we test those lows just in the last couple of hours. We test that low at about 7:30 a.m. We've bounced a bit since then, but pressure on gold to the downside. You take a look at the daily. Just the run that started 2 months ago, folks, in the middle of August. A simple pullback puts it around 4,000. Now, we hit 4,021 on those two bounces lower. You take a look at the daily volume. How's that for quality volume to the downside, right? You rip lower on volume, you bounce and make a high on lighter volume. You accelerate on more volume. Today's going to be a big day as well. Gold off by $35. You jump over to silver. Look at all those red bars. The green bars, light volume when you bounce. The red bars, accelerated volume to the downside. And we'll see how silver reacts. We're in this area of about $48, back to where we were on October 1st. Silver, technically positive on the session, but under pressure as well. You jump over to platinum. Getting a little bit of a bounce from the overnight lows on platinum. Platinum right now, technically positive $20 on the session. You take a look at the 15-minute. Just like the market last night at 8 o'clock in gold, platinum accelerates to 1481. And platinum, you're talking about a pullback from 1770 down to 1480. Talk about a pullback in these metals. Take a look at the daily. Right back to test the highs of where we were in July on platinum. You jump over to the VIX. We got a market right now. VIX hits a low of 1740 yesterday. Still, the VIX is predicated on the S&P, folks. S&P is pushing almost 6,800, and we got a VIX chopping around near 18. Okay, there is elevated volatility premium in this market. We saw the spike that we just had last week, and we have not abated just yet. You've given it up to a certain degree. But, boy, we got a market right now. I mean, you're talking about being, one good acceleration away from all-time highs. S&P's all-time highs on the futures, 68.12. We're trading at 67.78, 34 points away from those all-time highs. We could do it on the open in the first few minutes, and meanwhile, we have a VIX. Okay, yes, tension's easing. But you're talking about a VIX right now that's elevated from yesterday. The market's up by 5. And even with the VIX that was flirting with a 1755 handle, we're positive from there. Okay, the market, the VIX, is positive this morning as we have the S&Ps positive. Now, some of that translating potentially from some of the volatility in the NASDAQ. And when you jump around, Netflix. So, quite an earnings from Netflix last night. You accelerate lower this morning to 1142. Now, you're talking about on Netflix, okay, folks? It's a big move, but there was a big move priced into this. This is basically just the expected move. Now, you have to be correct in terms of the directional impact, okay? This is the volatility in either direction. If you were buying an at-the-money put or a call last night at about 1240, which is where you came into those earnings, you were paying almost $45. Well, you got a $90 move. Okay, so that's quite a return. We'll see when the market opens. But yeah, we were looking for about an $80 move, and Netflix moving about $90 south as they miss on earnings in a big way. They were supposed to make almost $7 a share. They make instead just under $6 a share. Yeah, $5.87 a share when they were looking for potentially $6.97. Revenue basically comes in line. Advertising up about 17%, I believe. And we are going to talk some gold. They're going to get into the toy business with K-pop Demon Hunters. They got deals going on with Hasbro and Mattel. I tried to watch that. I'm probably not the target demographic, but I tried to watch it once or twice. Anytime something's kind of a social phenomenon, give it a shot. Couldn't get into it. But yeah, there's the problem, man. 587 versus 697 revenue. They just touch it. You have to say, okay, when you come in this close in revenue, there are ways that they can drive revenue, okay? There are ways. They can spend more money to get more subscriptions, okay? But when they just touch on revenue and you miss to that degree on earnings, yeah, the market's a little worried. They guide down. The best ad sales quarter ever? Well, that should be the case because they're ramping up. Oh, look at this. We got streaming news hitting you. Warner Brothers Discovery. They're rejecting offers at $24. All right, let's jump over to this one. There's your little bit of volatility on that news. You spiked to 21.28, you're 20.73. They're trying to spruce up some interest in the acquisition for their company. But yeah, 325 million views on the platform for K-pop Demon Hunters. I'm pretty sure I'm probably one of them. But I shouldn't even count because I watched it for a few seconds and that was it. But yes, Netflix, you're going to trade down almost $100 on their numbers on the open. And again, keep in mind, you're talking about an $80 expected move. You're down $90. So this is nothing dramatic. They missed dramatically. A lot of volatility priced in right now, though. We'll see how we open. We're down by about $90 on Netflix on their numbers. Disney shares slightly in the red. You get a little bit of volatility with the streamers after hours on Netflix. Disney shares slightly in the red this morning. Paramount Skydance basically flat, and Warner Brothers with volatility as well on their potential acquisition. All right, S&P's up by 5. We'll come back, folks. We'll take a look at that gold contract. We'll jump into some of the equities. Gold trading lower. You have the equities. Agnico Eagle going to open down by about $4. We'll jump around, folks. Stay tuned. We'll come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We have the S&Ps up by 8 points right now, 67.81. This is a 5-minute chart. You see some of the volatility overnight. You're talking about a 20-point range, lows of 67.67, the highs of 67.87. But on a daily basis, just kind of calming down right near those highs, right? 67.81, about 30 points away from the all-time highs. You take a look at the volume in this market. A very light bounce on Monday, a very light, just no action day yesterday, and we'll see what today holds as we are now about 11 minutes to go from the opening bell. So we talk about gold. Gold extends route and volatile pullback from record price surge. That's how they put it. You better believe it. Okay, and when you talk about, so interesting, Citi, they cut the overweight recommendation after that slump. Kind of the first chink in the armor, potentially. Get on a gold. How about that ETF? Last month? Now, we'll see where we go, okay? Because, yes, you're talking about the miners, folks, all right? Get back to the XAU, okay? This pullback, the 3-day pullback we've had, yeah, it takes you back almost 5 weeks, right? September 15th, you have a high out there of 278. We hit a low yesterday of 282. So, you know, you pulled money from the ETFs, but where are we going to go from here? Okay, 669 million last month. The biggest ETF tracking gold miners is what they pulled last month on that ETF. I mean, you look at the gains that are still in there. Investors in that Van Eck fund pulled $668 million in September, the biggest outflow in 5 months. The fund is still up 115% this year. Now, we get some earnings. You got Newmont on Thursday. I talk about it in this article? Yeah, it is. Newmont on Thursday. AEM due next week. Barrick is not until November. November, folks, not that far away. All right, but Newmont, they're out with their numbers tomorrow. Jump around to some of these equities. Newmont right now, we're trading at about $83 in the pre-market. Okay, we're coming right back into that acceleration. The high out there of 82.05 from September 19th. You check out gold on that September 19th rally. There it is. Okay, gold was trading about 36.80 coming into that bar. You can see the pullback that we've had in equities as you're trading at $83 right now, almost coming into where we were on the 19th and the 22nd on Newmont. We get their numbers on Thursday, tomorrow. Barrick, one of the other leaders out there, we're trading at about $30 right now, right at the beginning of that September 19th acceleration. Okay, the equities, folks, are back to where gold was trading at near 3,600. Gold's at 4,000 and change. So watch out for these equities leading the way right now. Jump around to some of the others. New gold, we're trading at about $6. You're back to August prices on new gold. Okay, some of the more volatile ones, you jump over to Vista. We make a low yesterday on Vista of 167. We're trading right now with a bid ask of 170 to 173. Same thing, September 12th. So sent out an update to Gold Report subscribers yesterday. You know, you're going to have more volatility in this market. There's going to be other trades you can get into, and you just got to draw a line in the sand somewhere, folks, because so often you get this type of volatility, and you say to yourself, you know, I'll just wait for one more bounce. I don't want to get shaken out before the next rally, okay? But there's going to be more opportunities. Check out First Majestic. You're back to where we were September 22nd, potentially, okay, right around that pullback. And you're talking about a pullback on these equities, folks. That's a 20% haircut. 20% from the spike high. The equities always get a little bit parabolic in that final run, and boy, this one's been exceptional. And we'll see if today holds. And it's going to be an important one at these lows of 4,030. We're catching a little bit of a bid right now. We're up by $40 from where we were on the low, but nonetheless, pressure to the downside on gold, to put it lightly. Silver right now, 47.92. All right, we jumped around to some of the other companies. So Mattel, they're out with their numbers last night as well. 89 cents a share on $1.74. They miss on earnings as well. The market thought that they were going to make $1.07, and they make 89 pennies. You're down by $1. And yeah, look at the longer-term chart of this one, right? Whew. Not a good-looking long-term chart, folks. Mattel. Look at all the selling we have. Look at that selling from July and earnings ago. You put it on a weekly. So what do? We trade up into that bar. Come into this area of strength from May 12th, and you're going to dive right back below $18. You know, when equities line up like this, what I will say is you're looking to get into this equity, $16 is a nice area if you can get it. You know, we're still going to be at $18. That's it's another 10% below where we're trading at right now. But where the risk reward lines up well, okay, maybe you get in at 16, you give yourself some action. But when you're getting into equities like this, especially pick a stop and honor it. Okay? You look at this long-term chart. You like Mattel at $18? Well, that's good, because you could have gotten it 31 years ago when I was 14 years old at the same price, folks. Amazing, right? What is this company worth at this price right now? You're talking about a market cap. Come on, Thinkorswim. $5.7 billion. Well, it was a different time. Look at that ramp up, right? All the way up until Amazon ate their business for everything. And different businesses, but I think about the heyday of going to Toys R Us and playing with toys in the aisle. So I'm going to high school in Dedham, Massachusetts, folks. I play hockey at Noble and Greeno. Always talking it up, one of the greatest times in my life. I think say transformational. I always talk about I was fortunate to go to Villanova University. And yeah, college is important, right? No matter what you do at that stage of your life, 18 to 25 years old, of course it's important. But boy, once you're 18 years old, you have a lot of impression. And so when I went to Nobles from 12 to 18 years old, people say, oh, you went to Villanova, that must have been tremendous. Man, I learned so much more from the age of 12 to 18 than I learned in college. College, the social experiment of interactions, yeah, that's a different world. But anyway, we would have hockey practice late into the night, okay? And what would we do once we had cars when we were about 16 years old? So this is 1996, when Mattel was trading at $25. Of course, we'd go to Mickey D's or get some McDonald's, and then we'll go to Toys R Us, and we'd play with the PlayStation in the aisles. Jump over to Mickey D's, man. Mickey D's at that same time was trading at $17. It's now at $307. Mattel at the same price, trading lower on their numbers. We're coming back for the open, folks. Don't go away.
Skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. You have an S&P right now up by 2 points. As you see, just chopping around since basically the open on Monday. right? You look at the volatility that we had on Friday, last week, this week, since the open, just chopping around. And right now, we're flat to the tick, 67.74. Tech stocks trading lower. NASDAQ 100 off by 0.3% or 73 points in the red. The Dow off by 0.1% or 38 points, and the Russell off by 0.3 as well. Bitcoin off almost $4,000. We keep our eye on gold. 4,074. Slight bounce off the lows. We jump into the equities with earnings. Netflix, it's not stopping. There you go. Down $106, down 8.5%. Okay? And we jump around. So you take a look at, it was interesting. Okay, we were looking at, let's just, we'll do a lot of them. The 1240s was where the market was trading at last night. Okay, and a put was about $43. And yeah, there you are. Trading at all the intrinsic value of about $100, and you're going to get 94 delta, which means basically for every dollar you're trading, yeah, you're getting almost a full dollar a movement because the market is basically sure that you're going to expire the money at this point, and there you go. Now, if you're trading options like this, folks, okay, look how the deltas are jumping around here. It's going to take a moment for this market to figure out where we're going, okay, and the options market as it opens to recalibrate to a degree, because in all likelihood, within a minute or two, as you see, there's going to be a very high delta, which basically should be when you're 100 points in the money and these options expiring. The one risk, though, is that they're expiring on Friday. Okay? Now, I'd take that bet. Not sure I'm putting up 99-1, but at some point, yeah, I'm going to start taking that bet that Netflix isn't getting back above 1240 when their earnings, percentage-wise, they were supposed to make almost $7 a share, folks. And they made under $6 a share. That's a 15% miss on earnings, and they barely squeaked out revenue. You know, they turned on the holy grail of revenue when they started charging for advertising, and now you have to digest some of these gains. And, you know, where's the 382 pullback of this acceleration? You're talking about a run over a 3-year period from 162 to 1341. Just the beginning of the year volatility, somewhere around 900, maybe the nice round number of 1,000. We take a look at the volume. 1,100 is where you start getting into that huge acceleration from April 21st. We take a look at the daily. Yeah, a lot of selling going into the earnings yesterday, and today will be a big day. Today, I imagine, as well. Warner Brothers Discovery. So they say that they turned down a few deals. The last one was just under $24 a share. The market not pricing in they're going to get $24 a share just yet, because if you think they're going to get $24 a share, folks, then buy it at 21. The market's not assigning that. The market is realizing that if they don't get bought, you're going back down to $12. Okay? I mean, think about it. They're turning down deals right now for $24 a share. You were trading at $8 before their last earnings. You were trading at a high of almost 14 last July before their pullback on their prior earnings. Right, I'm going one removed. That's almost 100% premium in terms of where this was trading at coming into it. There's a lot of lofty expectations at $24. You're talking about an equity that's pushing $50 billion. Where are we now? $51.7 billion market cap. Okay, for some reference, Paramount Skydance, Ellison, I think they bought that for $7 billion total. You're now pushing $18 billion. And Netflix, the big dog, down by 8.1%, or a nice round $100 on the pullback, $484 billion. So yeah, not a big deal if Netflix wanted to become one of the potential suitors there. All right, let's jump around to what else we got going on as we get tech stocks trading a little bit lower. NASDAQ 100 off by 110 points right now. NVIDIA down by 0.3%. Microsoft slightly in the green. You jump over to Google shares. Quite the day yesterday for Google. You drive down to 244. You get back the action overnight to 260. We're trading at 255 right now, up by 1.5% for Google as we make new highs, new all-time highs this week. You jump over to Amazon shares, down by 1.5% right now. Tesla is flat. We're checking on some of the gold equities. All right, Newmont, a little bit of a lift on the open. Gold, a little bit of a pop on the open. We jump around to some of the other big miners. Barrick shares, okay, they're rebounding a bit. AEM barely in the red. Checking some silver stocks. First Majestic down by just 0.3% right now. In uranium, it was everything getting hit. CCJ was down dramatically yesterday. Right now, you're down about 0.3% right now. New Gold, there's a nice pop for you. We jump over to Vista. And yeah, down by 2.78%, but nonetheless, just chopping around where you were yesterday. So things have stemmed a bit. And yeah, you get Newmont numbers after the bell today. They're going to have to rationalize the share price going from 36 to almost 100, folks. Okay, gold this year, quite a run from 2,600. We're still sitting over 4,000. But boy, you're going to have some weekly selling. Okay, last week you did 1.9 million contracts in gold. Yeah, well, how about doing 524 yesterday and 325? So you're at 850,000 contracts just for Monday and Tuesday. And we're at 300 already. So you're at 1.15 million contracts already. Yeah, this is the beginning of Wednesday. Man, I had to calibrate myself. We got 3 full trading days left. It's going to be a big weekly volume bar. And boy, you might just encapsulate the entire last week. Engulf it. All right, we check back in on yields. All right, just under 4% on the 10-year right now. Dollar continuing to catch some strength. We're above 99 at 99 on the dot, basically. And yeah, Bitcoin under pressure. Down by $4,000. We give up that gain of $114,000 that you had all of yesterday. All right. And how about in the world of gambling? So the NHL, the first league to strike a deal with Kalshi and Polymarket. Multi-year deal. They have the right to use the NHL logos and trademarks on their platforms. Okay, both companies are going to benefit on-screen exposure during national broadcasts, including the playoffs and that Winter Classic, which is legendary. And yeah, the betting market taking hold. And what's interesting is you get that news on Kalshi and Polymarket. And you have this news out here on DraftKings as they're acquiring their own prediction platform, Railbird. Yeah, saying, all right, we got to get in this business, man. They're acquiring Railbird. They're launching the mobile platform to be called DraftKings Predictions. We'll see. And there's your acceleration on that news, and you give it up a bit, though. You're up by 3%. I don't know. If I'm going to prediction markets, probably not going to DraftKings. We'll see if they offer similar prices, if they can do it, but they are not the first mover in that market. All right, folks, we're coming back. We're talking to our man Teddy Kegstad. We'll talk some currencies. Always good conversation. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have all the markets slightly in the red. S&P's negative by 2, NASDAQ 100 off by 62. And right now, folks, as we do each and every Wednesday at 40 past the hour, we're going to talk to our man Teddy Kegstad. Folks, you can check out Teddy's outstanding Tiger Forex report. He's put new issues every week on Monday, updates throughout the week when warranted. You can check that out right under the newsletter tab. You gain access to a webinar in there as well. It comes with a 30-day money-back guarantee. And don't forget as well, under the services tab, 2 great webinars, each of them only $97, folks, capitalizing on time with calendar stock option spreads, as well as Japanese candlestick pattern stock and option strategies. Check those out. Teddy Kegstad, good morning.
Good morning, Tommy.
Teddy, they're talking about the Bears in the Tiger's Den, man. They were getting ready for you.
Yeah, well, you know what? They're right where they were last year. You know, after when they were at this point last year, then they went on an 8-game losing streak. So I'm not too up on it just because they've beaten some of the worst teams in the NFL right now.
Tempered expectations from a Bears fan. We will see. Yeah. How about expectations for this market? What are you seeing, man? We got yields under 4% on the 10-year, a little bit of dollar pop, metals with some action. What are you looking at in this market right now, Teddy?
Yeah, I think you're going to probably see yields buffering, lower yields, higher pricing, not too extreme. I think it's just going to be kind of scratching at resistance, if you will, until we have the Fed meeting and have a rate cut, which, you know, I still don't really think they're going to do, even though now the numbers are starting to move in a way where, yeah, it gives them a reason to do it, but Powell already did 1/4 point. So the question is he going to really feel pressured enough to do it again? I don't know. I would say I'm maybe a little bit more likely to think that he might cut this meeting than I was, say, a month ago. But I still don't really think it's going to come. I think it's going to be delayed more than anything else. Maybe we get one in December. I mean, I think that we still will get a cut before the year is out. But we've talked about this before. It's already factored into the market. So until they really get to, a full 1/2 point from where we're at, or even 3/4 of a point, I don't think you're going to see yields really start to pull back in a big fashion until then, because there's no reason. It's already priced in. You know what I'm saying? Now, if the forecast starts to get to where they think that over the course of, say, 2026, that we may have a full point, over the course of that year, including perhaps another quarter before, or a 1/2 point before that point, we get to that, I would say then, yeah, I think you can start to see a nice rally in the 10-year and the 30-year and start to see yields drop. But until then, I just don't really see fundamentally or technically a reason to get long, the 30-year and the 10-year right now. I'd be very cautious about spiky type of trading. I think we're going to make higher move highs and higher move lows. I just don't think the volatility is going to be there right now. At least there's nothing I can foresee in the short-term future that's going to cause it to get very erratic.
Can I ask you for the dollar versus the 10-year, for instance? Because the 10-year, we're right where we were basically for their last meeting. No real movement, and maybe it's, as you're talking about, the market knows that we're going to cut, even if it's thinking we're going to cut. There's been, we were approaching right around 4%, just under it when the chairman was talking. We've been chopping around. But the dollar's actually going up since then. Do you read anything into that? The dollar was pushing 97, 98. We're now above 99 on the dollar, even with the 10-year just chopping right under 4%. What do you think about that relationship? Anything going forward, dollar strength or?
Yeah, you know what? That's a really good question, Tommy. And I think one of the reasons where you really see that is, like you said, yields are pretty much where they were at. The dollar is a little stronger, but if you look at where the dollar is in relation to say the pound, if you will. When we were at the last Fed meeting, the dollar was much weaker against the pound. So is it really strong? No, but it is definitely in the other direction. If you look at the euro US dollar, the same factor is there. Now, those are a couple of the biggest weights. The only one that's not doing that would be, say, the US dollar yen. But that's because of the oil trade and stuff like that. That's where that's been coming back. So the dollar's definitely lost against, the yen, especially in the short run, but against the euro and the pound, it's definitely gained. And that's where you're seeing the dollar spike up a little bit higher than where it was back in September versus yields right now. At least that's what I attribute it to, because the biggest weight, if you will, is in those currencies. So that's where you're seeing that lift.
I appreciate the analysis. That's what I was asking for sure. And what do you think about crude, man? We're chopping, $68 and change. We made a low a couple of days ago. I think it was a 55 handle. Yeah, 55.96 crude. What do you think about crude at $58 and change right now?
Yeah, I think right now it's a rally to sell. I think you're seeing a profit-taking rally. I wouldn't get too hung up on I would be very cautious being a bull in the crude market right now. That's for sure. So I would be looking, instead of getting long here at 58, I'd be looking to sell it at 60 to 62 bucks. I really doubt that you're going to see oil get above $62 in the short-term future, because there's really absolutely no fundamental or technical reason I think that could bring it back up. So I would say the last swing high, which was back on on October the 8th, we had a swing high of around 62.92, so just under 63 bucks. I think that's a pretty critical area. I think if we get into that spot, you're going to see heavy selling pressure. And that would be at the lower end of the range that it was buffering off of before. So where support becomes resistance. I think that's where the kind of situation that we're coming into, that now that old support level should become resistance somewhere around that $63. And I think that it'll be trending lower into Thanksgiving and the holidays. My prediction is that we'll be having lower gas prices a month from now, a month and a half from now, than where we're at right now. And we've already seen them to tick down a little bit. That's for sure. I mean, not so much in my state because the gas taxes are so high. No matter what, it's still expensive. But even I paid under $3 a gallon a few days ago, which was the first time, I think, in 2 years, something like that.
Pretty cool. Yeah, everyone feels that. We know it, man. It's especially, and we got it made in Florida, especially where we are. We got a port in Tampa, so we're probably pushing 275 right now, depending on where you're going. I always joke about you're paying less for a gallon of gas, Teddy, than I'm paying at some places for a gallon of water, right? $2.99 for a good gallon of water, and you go outside, it's $2.75 for a gallon of gas. Pretty remarkable. Hey, what do you think about gold? I got to ask you. Some action yesterday, metals. No real huge move in the dollar, of course, to drive. What do you think about? You got an opinion on the metals market right now? A little bit of sell-off in the last 24 hours, 36 hours?
Sure. Well, yesterday was definitely a really nice sell-off. I would say short term, I think you have a nice little top, area that we came into, over the last few sessions. It's obviously a strong bull. It's hard to fade a trend like this, but then it's also been parabolic. So I think you can see that. I don't think yesterday was an exacerbated sell-off. I think it was an indication that, there's a lot of profit-taking potential coming into where the market's at right now. Gold it's had a very, very nice run. So and all commodities, especially when you get to the reals, they have boom and bust cycles without a doubt. So I'm not saying that, gold is a bust and it's going to tank or anything like that. But I think you got to be rational and expect to see some nice profit-taking moves.
Great stuff as always, Teddy. I appreciate the conversation. Folks, check out the Tiger Forex Report. Check out those great webinars under the Services tab. And Teddy, we'll talk to you in a week, man. Have a great week.
Sounds good, Tommy. Take care.
Thanks so much. Folks, we're coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Texas Instruments with their numbers last night down by 6.5%. And when you're talking about forecasted earnings for the current quarter, they were looking for quite a range they gave themselves, from $1.13 to $1.39. But the Wall Street consensus was looking for $1.41. So their earnings, $1.13 to $1.39, when the market was thinking maybe $1.41. You're talking about $180 equity, and you're only going to bring potentially $1 of earnings per quarter. That's $4 on the year for $180 equity. Are you buying $180 equity if you're only making $4 a year? On the earnings conference call, they say analysts were not enthused about the implied gross profit margin from the earnings guidance. Management called out depreciation costs and lower utilization at factories. Well, lower utilization will do it. Nonetheless, trading lower by 6%. We take a look at the weekly. And yeah, not a good-looking chart, man. Right? Look at this. Sometimes, folks, it's so simple, right? If you're in this equity and you're running from April, okay, and you say to yourself as it's trading higher, geez, where should I start to really get the spikes up on my back? Maybe where it topped out last year at $220 and you get a buck higher, right? And here we are. You're talking about 3 months later at $170 and you're down by 6%. We check in on Netflix on their numbers, down by $100. And yeah, be careful on Netflix, man. You're breaking this whole area you've been trading in since May. Okay? And, you know, longer term, yeah, there's nothing like Netflix, folks. But you're pushing a $500 billion valuation. Okay? And you're pushing a run from 162 to 1341. And a simple 382 pullback brings you all the way back to $900. This volatility from earlier in the year. Look at this market. S&P is about to go positive. And we check back in on gold. Gold, a little bit of a bounce. And as I was saying to Gold Report subscribers yesterday, folks, just get your stops in there if you got equities. Okay? Doesn't mean you have to sell. Gold's going to be fine in the long term, but get some stops in that market, even in the equity market. Folks, thanks so much. Stay tuned. Basil Chapman, he's coming up live for the Tiger Technicians Hour right now. I'll see you today at 3.